Nation, we're all about those penny stock returns here on the channel. More than 129,000 of you saw our 5 penny stocks nobody was watching in our August video, and you can bet they're watching now because in less than a month, one of those is up over 49%, and another, Velocity Financial, shot up 70% after the video. But I got a lot of questions and comments on that video about the price of these penny stocks, some with share prices as high as $10 each. Now understand that penny stocks aren't just those under $1 per share. There's actually no technical definition for these high return investments, but a widely accepted one is that any company under $1 billion market cap. And that's it. It's not stocks under $10 or $5. The stock price really has nothing to do with it being a penny stock. But for this video, I'm coming over to the dark side and picking the best penny stocks under $1 per share. Not only will I show you how to find these moonshot investments, I'll show you the risks and what to watch for. Then I'm going to reveal the 5 penny stocks with a stock price under $1 per share that I'm watching right now. Now, while I'm going to be taking that narrow view to create the penny stock list for this video, I am putting together another video, a complete start to finish guide on investing in penny stocks that I'm going to be rolling out in the next couple of weeks. If you're not part of the Bowtie Nation yet, make sure you tap that subscribe button so you don't miss that one. Here I'll be using the StockCard.io platform to find and research these stocks. And besides some of the investing tools that we'll use today, StockCard makes it really easy to analyze a stock because it takes all the financial measures like the quick ratio, the debt to equity ratio that we talk about here on the channel, and then puts them into these easy to understand levels for growth potential, operations, and valuation. Besides those research tools though, StockCard is really going to help us with this one because it allows you to explicitly screen for stocks under $1 along with some of the fundamentals and the ratios that we're looking for. I'll leave a link to the platform in the video description below to test out the screener for yourself. Now, I want to get into our list of penny stocks, but I'll take you through that stock screener and show you what to look for in these stocks later. First on our penny stocks list is Kraken Robotics, ticker KRKNF, a $73 million maker of underwater sensors and robotics for the military and industrial sectors. And now while the oil and gas segment has been pretty weak lately, the military and some of these other segments have really driven sales for the company and could be a $5 billion market. Revenue has grown at an 88% annualized pace over the last 3 years, with the company booking 26% sales growth even in the uncertainty of 2020. Now, the company has a very strong balance sheet as well, with $3.4 million in cash against just $2.2 million in total debt. The current and quick ratio here are both looking pretty good, and the company should have no trouble with that funding growth. Researching the company, I found a huge catalyst and an interesting twist on the business strategy. This year, the company is shifting to highlight data analytics as a revenue driver. Now, the 4 underwater systems and 3 sensors have been collecting that data for nearly a decade, and that data side of the business could be big. More than 15 acquisitions of these underwater systems companies have been made since 2016, and I think Kraken could be the next target for a buyout. We've got 4 more $1 penny stocks to highlight, including my favorite in the AI video security space, but I wanted to show you the screener that I used to start our search on these. I started on the Discover tab here on StockCard and then to Filters where you can name and save your stock screeners. The filter will continuously update and you'll always have that list of penny stock ideas. So first I'll toggle this box for stocks under $1, then I want to narrow it down to companies with strong sales growth and good operations, which is going to be factoring in that sales, profitability, and the management effectiveness. Finally here, I also want to screen for companies with strong cash availability, a hugely important factor lately. I'll click apply and it's narrowed our list to 26 stocks under $1 that I can then research to find our best picks. So some of those filters might seem a little obvious, but I wanted to expand on each. Now we start here with companies with strong sales growth, and this usually means at least 20% annually or more. The core idea of these small cap penny stock companies is that they're growing exponentially every single year and soon could be those multi-billion dollar leaders. But beyond that, I also want to look deeper into the operations to make sure that management is putting on that growth responsibly. Besides that strong sales growth, I want to see that the company is doing it profitably with increasing profit margins and return on assets. Because Nation, any company can throw money at marketing just to grow sales. I want to find companies that can grow sales and cut their costs at the same time. Finally, I'm looking for companies with the cash available to survive. Now this means lower debt and higher balance sheet cash, and it's probably the #1 thing that I'm watching lately in stocks. Nation, the fact is we might not be out of that recession just yet. Whether it's in these small startup companies or the mega caps, I want to make sure that my stocks have the cash cushion to withstand whatever the economy brings. Next here is the sole penny stock trading on one of the major exchanges, a $240 million Tellur on ticker TEEL. Now, Telluride is a pre-construction LNG export terminal in Louisiana that could spin off up to $2 billion in free cash flow when it's fully up and running, and with a target valuation of $14 per share. The company has secured its permitting and is ready to raise financing with construction to start soon. The facility would enjoy a cost advantage from the proximity to that Haynesville gas production at around $2 per million BTUs, regardless of where the spot market price is. Now, Telluride's pipeline and other businesses already bringing in some revenue, with sales growth at 19% on a year-over-year basis and expected up 24% in this fiscal year. Now, it's not going to hit that $14 estimated share price for quite a while, but analysts do expect the shares to reach somewhere under $4 per share over the next year. And Nation, I like all 5 of these stock picks, but they come with a huge warning. Now, all 5 of these are extremely small companies with risks ahead of them, but 4 of these are only traded on what's called the pink sheets. Now, pink sheet stocks are those too small to trade on the major exchanges like the New York Stock Exchange or the NASDAQ. They're called pink sheets because the quotes used to literally come out on those pink sheets of paper. And you can find some real undiscovered investments here, but there's also a pile of dog shit to sift through. The problem here is that these over-the-counter stocks aren't regulated like those ones you find on the NASDAQ or the NYSE. They don't have the same audit or reporting requirements, and most have very low volumes of shares traded daily, and there's just generally a lot less known about these companies. That makes the pink sheets a breeding ground for scammers and just generally weaker companies that may never amount to much. But then the idea here isn't that every one of these is going to become the next Apple or Tesla, or even that all 5 are going to be around in a year's time. The idea behind investing in these penny stocks, especially these extremely small pink sheet stocks, is that startup investing mentality. If you look at a chart of returns on angel investments, now that's private investments in startup companies before they issue shares, more than half of those companies return less than the original investment. Upwards of 55% of these investments are complete turds, and about a third of them return nothing at all. But it's those few moonshots, the 10 or 15% of the companies that get an acquisition offer or that IPO that makes it all worth it. Look at these last 3 columns. Returns of 5, 10, and 30 times your money that take the portfolio return to a 2.6 times or a 27% annual return. Now, since most investors can't invest the tens of thousands of dollars in these angel startups or just can't get access because of government regulations, then we go to these small cap penny stocks as the next best thing. So you're looking for companies like Amazon that issued shares in 1997 as a $300 million company to grow into a $1.5 trillion powerhouse. And I think this next one, Gatekeeper Systems, ticker GKPRF, could easily be one of those runaway returns. Gatekeeper is a $55 million provider of tech hardware and video solutions to the public and private market. Now, I really like this market, and in fact, the company has a hand in some of the best trends I'm watching. Besides providing the video capabilities for smart cities and security, its system is AI-driven and combines video analytics to make better decisions. Its platform as a service model will also mean consistently growing revenue as cities adapt to that new IoT revolution. Sales have grown at an 11% annual pace over the last 3 years, but are up over 26% this year. It's also cash positive with $1.75 million in cash against just $240,000 in total debt with all the cash availability it needs. Now, one thing you'll notice is I'm not just using StockCard for the research here. The platform includes a lot of great data and boils down those ratios into these easy to understand cards, but there's going to be gaps in the data for any penny stock, and especially in these pink sheet stocks. And that's actually where the biggest opportunity comes from, finding the best penny stocks that nobody is watching and using your own research. For that, I'll go to download the company's financial reports and the presentation from its investor relations page. Now, you can always find this with a Google search for the name of the company plus the words investor relations. You can use some of the analysis that we talk about on the channel to study the financial reports, or just get management's perspective with the company presentation, or check out the news and the press releases. Now, you have to take all this with a huge grain of salt because this is what management wants you to see, but these are invaluable for investors in these penny stock companies. Our next penny stock, $114 million Rapid Therapeutic Science Laboratories, ticker RTSL, owns a sub-license agreement to 2 metered dose inhaler devices. The company is currently looking for application uses for these devices to deliver anything from cannabinoids to medications to a user's bloodstream through the pulmonary tract. Now, medical devices and healthcare in general are a strong market for startups, and while the balance sheet isn't as strong on this one, they do have the cash necessary to play the idea out. So this wouldn't be my first pick among the 5, but this one has some strong upside potential if it can carve out a market for those inhalers. Another cool feature to Stock Card here is the ability to see how many other investors are watching this stock, investing in it, and then to follow it yourself. You can download a copy of the stock cards for the company and then share the ones that you find on social platforms here like Facebook or Twitter. Craig Biocraft Laboratories, ticker KBLB, is a $103 million producer of protein-based fiber using DNA technology with an eye to changing the apparel industry. Now this one triggered that spider sense for the nerd in me because the company is using genetic engineering to develop what it calls a spider silk fiber that is lightweight, flexible, and high performance for use in all kinds of apparel applications. The company isn't booking sales yet, and the balance sheet isn't as strong as some of the others on the list, but this is applying for trading on the NASDAQ exchange. That means stricter oversight and regulatory requirements, so it gives me a little more confidence in the company as a legit business. It's a long shot like all of these penny stocks, but an interesting idea, and all you need is for one or two of these companies to go big to produce those 5 and even 10 times returns on your money. Click on the video to the right for the 3 tech stocks that could surge on that work from home trend. 3 stocks to buy for huge long-term returns. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.